Welcome to the Option Guy. Today, we're going to explore one of the most fascinating and important parts of finance, the share market. Whether you call it the stock market, the equity market, or simply the markets, this is where companies and investors meet to buy, sell, and grow wealth. Let's understand what it is, how it works, and why it matters to every one of us. At its core, the share market is a place where people buy and sell ownership in companies. A single share represents a tiny piece of ownership, a claim on that company's profits and assets. When you buy a share of Apple, Tesla, or Reliance, you become a part owner of that company. If the company performs well, your share value rises. If it struggles, your share value falls. The share market is, essentially, a marketplace of ownership. So, why do companies issue shares? To raise money. When a business wants to expand, build factories, hire people, or launch new products, it needs capital. Instead of borrowing all that money from banks, the company offers ownership to the public through an IPO, initial public offering. Investors provide money. The company provides shares. It's a win-win. Companies get growth capital, and investors get a chance to share in future profits. Once shares are issued, they're traded on stock exchanges, organized marketplaces where buyers and sellers meet electronically. Examples include the New York Stock Exchange, NYSE, NASDAQ, London Stock Exchange, LSE, and in India, NSE and BSE. Exchanges are like digital bazaars of ownership, where millions of trades happen every second, determining prices through supply and demand. This constant activity is what we call the market. So, who decides what a share is worth? The market does. Prices move based on demand and supply. When more investors want to buy a stock, the price goes up. When more want to sell, it goes down. Behind those movements are millions of individual decisions, driven by earnings, news, confidence, and sometimes, emotion. This is what makes the share market both powerful and unpredictable. People invest in the share market for three main reasons. Keycap 1 growth, to benefit when the company expands. Keycap 2 dividends, a share of the company's profits. Keycap 3 wealth creation, building assets over time through compounding. Historically, equities have outperformed every other asset class in the long run. But higher potential return always comes with higher risk, and that's what makes the share market both exciting and humbling. Let's say you buy one share of a company at 100 Indian rupees. After a year, the company grows and the share price rises to 120 Indian rupees, you've earned a 20% return. But if the price falls to 90 Indian rupees, you lose 10%. The share market rewards patience, research, and discipline, not speculation. Over time, investors who stay invested in strong companies tend to benefit from economic growth. Many people mistake the share market for a casino. But there's a difference. In a casino, the odds are fixed against you. In the share market, the odds are in your favor, if you understand what you're doing. The share market rewards knowledge, discipline, and time, not luck. It's not about gambling. It's about investing in real businesses. Investors make money in two ways. Small blue diamond capital gains, when the share price rises. Small blue diamond dividends, when the company shares profits with shareholders. Some investors focus on growth, others on income. But all successful investors rely on one thing: probability over time. The longer you stay invested in quality companies, the greater your chances of success. The biggest risk in the share market isn't the economy, it's emotion. When prices fall, fear takes over. When they rise, greed takes control. The best investors master not just analysis, but self-control. Because markets fluctuate, but discipline compounds. The share market isn't just for traders, it powers the economy. It helps companies raise funds, creates jobs, builds infrastructure, and drives innovation. Every major technology, hospital, or energy project was once funded by investors. When you invest, you're not just buying shares, you're building the future. To summarize, the share market is where ownership, opportunity, and optimism meet. It rewards patience, punishes panic, and teaches lessons no classroom can. Whether you're 18 or 80, understanding the share market means understanding how the world builds wealth. I'm the option guy, and this is your guide to seeing finance not as noise, but as logic in motion. Subscribe for more timeless lessons that simplify money, markets, and decision-making.